Welcome to our deep dive into JSW Steel, a powerhouse of the Indian industrial landscape. As we look toward 2026, JSW Steel stands as the flagship company of the diversified $23 billion JSW Group. It has evolved from a single plant in 1982 to India's leading integrated steel producer. For investors and professionals, understanding JSW is synonymous with understanding India's infrastructure trajectory. Today, we will analyze why this stock is a cornerstone for many portfolios and what the 2026 outlook entails. We are looking at a company that is not just producing steel, but is fundamentally shaping the urban and rural development of one of the world's fastest-growing economies. Let's explore the strategic drivers that position JSW Steel for significant capital appreciation over the next 2 years. To project where JSW Steel is going in 2026, we must first look at its current footing. As of 2024, the company has maintained a resilient balance sheet despite global commodity price volatility. With a current crude steel capacity of approximately 29.7 MTPA, the company has shown consistent volume growth. Revenue streams are diversified across hot-rolled, cold-rolled, and galvanized products. While the market has faced headwinds from high coking coal prices, JSW's operational efficiency has kept EBITDA margins competitive. Investors are currently watching the stock's consolidation phase, which many analysts believe is a coiling effect before the next major breakout. This stability provides a solid foundation for the aggressive expansion plans currently underway. The biggest growth driver for JSW Steel leading into 2026 is its massive capacity expansion. The company is on a clear path to reach 38.5 MTPA by the end of fiscal year 2025. Key projects include the 5 MTPA brownfield expansion at Vijayanagar and the ramp-up of the Bhushan Power and Steel facility. This isn't just about volume, it's about economies of scale. By increasing capacity by nearly 30% in a short window, JSW is positioning itself to capture the lion's share of domestic demand. For investors, this capacity jump is the primary catalyst for projected revenue growth. When these plants hit optimal utilization levels in 2026, the impact on the bottom line will be substantial. The demand side of the equation for JSW Steel is bolstered by the Indian government's aggressive infrastructure spending. Initiatives like the National Infrastructure Pipeline and Gati Shakti are driving unprecedented steel consumption. Whether it's high-speed rail, new airports, or urban housing, steel is the primary ingredient. India's per capita steel consumption is still well below the global average, suggesting a long runway for growth. By 2026, we expect domestic steel demand to grow at a CAGR of 7 to 8%. JSW Steel, with its extensive distribution network and proximity to major ports and industrial hubs, is perfectly situated to fulfill this requirement, ensuring high-capacity utilization across its new facilities. Profitability in the steel industry is won or lost on the cost of raw materials. JSW Steel has made strategic moves to secure its supply chain through backward integration. By winning bids for several iron ore mines in Odisha and Karnataka, the company has significantly increased its captive iron ore supply. This reduces reliance on external markets and shields the company from price spikes. Furthermore, investments in digital transformation and AI-driven furnace optimization are shaving off operational costs. By 2026, these initiatives are expected to lower the cost of production per ton, widening the gap between JSW and its less integrated competitors. This cost leadership is a critical component of our long-term bullish outlook. One of the key concerns for capital-intensive industries is debt. However, JSW Steel has demonstrated a disciplined approach to its leverage. Despite the heavy capital expenditure for expansion, the company aims to maintain a net debt-to-EBITDA ratio below 2.75x. Strong internal cash flow generation is being used to fund these expansions, minimizing the need for excessive external borrowing. For the 2026 horizon, as the new capacities begin generating revenue, we anticipate a significant deleveraging phase. A healthier balance sheet often leads to credit rating upgrades, which in turn lowers borrowing costs. This virtuous cycle is a major green flag for institutional investors looking for stability alongside growth. Now let's talk numbers. Based on the projected capacity of 38.5 MTPA and an expected improvement in steel spreads, analyst consensus for JSW Steel is increasingly optimistic. If the company achieves its EBITDA targets and continues to dominate the domestic market, we see a potential share price target representing a 25 to 35% upside from 2024 levels by mid-2026. This projection assumes a stable global macro environment and continued government spending. Technical indicators suggest that once the current resistance levels are broken, the stock could enter a new price territory. Investors should watch for the golden cross on the long-term charts as a signal for the start of this 2026 rally.
In conclusion, JSW Steel is not just a commodity play, it is a strategic bet on India's future. The combination of aggressive capacity expansion to 38.5 million tons per annum, robust domestic demand, and disciplined financial management makes it a compelling story for 2026. While risks such as global recession or raw material inflation exist, JSW's backward integration provides a significant safety net. For professionals and investors, the key is to monitor the quarterly ramp-up of the Vijayanagar and Bhushan facilities. As these assets come online, the stock's valuation is likely to be re-rated. Thank you for joining us for this outlook. Stay informed, stay strategic, and keep a close eye on this steel giant.